Hey everyone, this will be a really quick one. I like to do a lot of digging when I invest in a company. I'm gonna show you one that I rejected very quickly just to emphasize the process. Once again, this isn't investment advice. This is just me thinking out loud and learning in public and showing my process so that I have a contemporaneous record of how I did something. So if I like to look at things that aren't commonly looked at, and I like to do a deep dive, and there are thousands of stocks, even if I did this full time, I couldn't spend a lot of time on any one particular one. So the best way to do it is to look at them quickly and say no. And then if they seem interesting, you keep digging. But the in most of the things I look at, 99%, I'm just going to say no and move on, and then focus on the 1% that really show promise. And part of that filtering process is finding good ideas. And one of the places that you can get good ideas, I'm like this website. It's called Open Insider, and I don't get any commissions or anything for recommending, and it's a free site. But this will list large purchases or purchases by insiders of publicly traded U.S. stocks. And so if you look at, these cluster buys or insider buys or penny stock buys, and something jumps out at you, then you can check it out. And one that jumped out at me here was this one, Sunrise Realty Trust, $13 million. And if you click on it, you'll notice that some of the insiders, the executive, the director, the president, have all bought large amounts of stock. And then if you go to the market cap of the company, SUNS, you will see that it's not a big company. It's a realty trust. And I think I did a video on a REIT called Easterly recently. But this one has a pretty large dividend, 14%, which is very unusual. And it's only 153 million market cap. So the fact that the insiders are buying tens of millions of dollars of this stock sort of raises a question in my mind, like, well, what is so good about this? Why are they looking at it? So I went to the website, you go to the investor information segment, and then you just start looking for things. So it's a company run by the Tannenbaums, who apparently have some uh, business experience in this area with Oaktree, which is a pretty well-known Wall Street firm, and they set out on their own to buy or set up this REIT, and they issued a secondary offering of stock recently, which is where they bought that $12 million. And appears that they are a mortgage REIT and they only lend to companies in Texas and Florida, which are very high growing states. And they are subordinate and floating interest rate loans. So, what does that mean? If you bought a house and you have a first loan and then you have a second loan, you notice that the second loan has a higher interest rate than the first loan because it is more risky. So if they foreclosed on your house, you get wiped out, then the primary loan holder gets paid, and if there's anything left, then the secondary mortgage holder gets paid. So that's what these guys do. They do these subordinate loans on commercial properties in Texas and Florida, which are the two fastest growing states, and that's why they get such a high interest rate. And these are floating interest rate, which is good or bad depending on how you look at it. So if it's floating and interest rates come down, this 14% that you're getting is going to come down, but it makes it easier for the people who borrowed the money to pay, so that's less likely to default. If interest rates go up, that 14% would go higher because there's floating rate interest. However, by the interest rate going higher, it makes it more likely that some of the people they lent to will default and you'll have to foreclose, which sounds like a good thing. You get to take their property, but it's a great thing for the people who have the senior loan because they'll get paid 100 cents on the dollar before you get anything. And let's say you build a apartment building somewhere in Austin and it's half finished and you try to sell it. You would The senior loan holder would have to finish it, and it's would be hard to get 100 cents on the dollar if you were the second mortgage holder. So anyway, floating interest rate, subordinate doesn't interest me. And also with these mortgage REITs, they lend money to people, and then you're buying a participation in all the paper that they own. It's not as good as owning the actual real estate because if you have a problem with the actual real estate, you can renegotiate with the lenders, and you can as long as you're breaking even, still stick around. But if this paper becomes worth less and less, you own pieces of paper and you're kind of relying on the skill of the people running the outfit to get your money back. So not for me, but as I said, you have to turn over a lot of rocks and just see what you like and what you don't. And the best way to do that is to get rid of ideas very quickly because if there is something that looks really attractive, like 14% interest rate, there's probably got some hair on it. And if you're comfortable with what it is and think that the market may be misperceiving it, maybe you can make some money. But most of the times, it's better just to move on and find more promising things. So that's a quick one, Sunrise Realty Trust. And you'll notice I haven't done very popular stocks like Facebook or Google. I do stuff like Sunrise Realty Trust or Intrepid Potash or Taylor Devices, and that's why I only have a couple of hundred subscribers, and that's okay. I'm not doing this to make money. I don't sell a course. I don't sell a subscription. This is just me, as I said, going through my process, and if you enjoy it and get something out of it, that's fine. And if you have any questions or disagree with anything I said, just put it in the comments and have a great day.